BHP announces a whopping profit and record dividend. The Commonwealth Bank tips an interest rate rise in just 4 months' time, and why scrap metal is suddenly popular. It's Wednesday, the 16th of February 2022. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael. Are you well?
I'm going well. How is sunny Orange in the New South Wales Central West this week?
It's lovely, Michael, and because we're up early, I get to take those early morning walks in the fresh country air.
Perfect. Sounds good to me. All right, and stay listening, of course, for Sean's chat to Grant Dearlove, Managing Director of Australian Family Lawyers. Really interesting ASX-listed company, that one. But first, Sean, as I mentioned, BHP announced a whopping $14 billion profit for the December half year yesterday. The big Australian, it seems, is getting bigger.
It sure is, Michael. In fact, we should stop calling it the big Australian, though, because it really is a major global organisation that happens to be listed on the local bourse. The $10.7 billion half-year profit equates to around 14 billion Aussie dollars. It announced a much bigger than forecast $1.50 US a share dividend. It's fully franked. Good news for all those small shareholders. Iron ore drove the business, but coking coal and strong copper prices contributed as well. BHP is on track to merge its oil and gas business with Woodside Petroleum by June 30. Now, CEO Mike Henry was upbeat about the future, saying the outlook for demand from China was expected to improve later this year. One of the biggest uncertainties, though, remains the border closure in Western Australia, where most of the iron ore operations come from. BHP's profit margins were high, its iron ore production was at record levels right when iron ore prices peaked, and it managed its cost base, which is no mean feat given labour shortages, supply chain challenges and rising costs of goods. But the future might be tougher. Iron ore prices have fallen. Diesel, acid and power prices are all much higher, and they're the sorts of things that BHP uses daily in its mining operations. Mike Henry said some price hikes will remain for several years, but he's confident BHP can manage those higher prices better than its competitors. It's already the lowest cost iron ore producer in the world, and Mr. Henry said inflation is indicative of economic growth, which of course should be good for commodities. BHP's share price initially spiked, but then fell back through to lunchtime as iron ore futures tumbled. In fact, iron ore futures yesterday fell 11%. Notwithstanding that, BHP closed flat, which is actually a pretty good performance.
Okay, so what happened across the rest of the local market yesterday?
Well, the S&P ASX 200 closed down 0.5% to 7,207 points. Energy stocks led the falls as oil prices came off their 7-year highs. Now, the major banks were lower, while the big miners were also down following a drop in the price of iron ore futures. Just as I mentioned then, Fortescue ended the day down more than 5%, and Rio was off nearly 3%. The retailers all did well. Wesfarmers, Woolworths and Coles were all up between 1.3% and 1.7%. Gold prices remain high, Michael, and they continue to climb. Now, that's helped some of the gold stocks, though there's a fair bit of profit taking out there at the moment, which means some of the gold stocks actually fell yesterday.
And what about Wall Street and the other overseas markets, Sean?
Well, US shares rallied, as did European shares, while oil prices fell overnight, Michael. There were reports that Russia had withdrawn some troops from the Ukrainian border, and that buoyed markets. In early afternoon trading, the S&P 500 was up 1.2%, and the Nasdaq was up 1.7%. The Stoxx Europe 600, which measures the performance of the top 600 companies in Europe, was up 1.3%, and London's FTSE ended the day 1% better. As I mentioned, oil prices fell. They were down 4%, though they do remain relatively high, and the Aussie dollar is buying 71.5 US cents.
Okay, we'll be back in a moment with the rest of the day's business news. Plenty to talk about today, Sean. Commonwealth Bank economists are tipping an interest rate rise in June this year, which is earlier than it was previously forecasting.
Yes, the country's largest bank and biggest home lender said comments from the Reserve Bank Governor Philip Lowe last week suggest the central bank is thinking about lifting rates at some point this year. Now, Combank's economists expect higher inflation and higher wages growth than the RBA's forecast. CBA's head of Australian economics, Gareth Aird, believes that will force a rate hike in the middle of this year. Now, Commonwealth Bank thinks the cash rate will be 1% by the end of this year. Remember, it's currently 0.1%. So that's a pretty big jump in just 10 months. It's a very aggressive forecast relative to other market economists, but given the information the bank has on the economy, it's certainly well worth taking notice of.
Hey, Sean, do you know why I like working with you on Fear and Greed?
Why is that, Michael?
It's because whenever the Reserve Bank holds its monthly board meeting and the minutes are then released a couple of weeks later, we have to decide who's going to go through those minutes. And you always volunteer, and I am eternally grateful for that.
I don't think I have ever volunteered. I just think it's expected of me.
It is, yes. And so was there anything in this month's minutes that we need to be aware of, Sean?
Well, I read them and no, there wasn't a lot new in it after all that. I mean, the Reserve Bank keeps talking about being patient as it monitors how the various factors affecting inflation in Australia evolve. You can't accuse the central bank of being trigger happy. I've got to say that. And those minutes that were released yesterday show that they really are waiting for the data before making any decisions.
Okay, whereas you will always volunteer to read the Reserve Bank minutes, I will gladly put up my hand to watch Question Time, especially when it's heating up like it was yesterday. We are clearly past the coronavirus-induced truce between the Coalition and Labor, Sean. It almost feels like there's an election coming up.
It sure does, doesn't it? I mean, of course, the federal election must be held at some point in the next 3.5 months. And as you suggest, Michael, the campaign has well and truly begun. Now, what we learned over the past few days between news poll and state by-elections is that no party is managing to get much cut through and pick up swags of support. That goes for the Liberals, the Nationals, the Labor Party and the Greens. Question Time yesterday included a pledge from the government to toughen laws to make it easier to deport criminals. The Prime Minister said his government had deported 10,000 people since it won power. I must say, I'm not sure quite why he's boasting about that one. Anyway, Mr Morrison also attacked opposition leader Anthony Albanese for a comment he made back in 2012 on not turning back boat people. For its part, Labor focused on the crisis in aged care and why 700 people have died in the facilities this year. It also questioned the funding of money into coalition-held seats and was critical of the Morrison government's handling of bushfires in New South Wales 2 years ago. Now, Mr Morrison and Treasurer Josh Frydenberg both had a go at independent MP Zali Steggall, who's under fire over a $100,000 donation from the family trust of a coal investor before the last election. Ms Steggall, of course, holds the seat of Warringah, Tony Abbott's old seat, which the government certainly hopes to win back at the next election.
Okay, now, Sean, I was really quite curious about this next story about scrap metal suddenly having a major surge in popularity.
Yes, it's become very popular the world over, and that's particularly good if you happen to be a scrap metal merchant like Sims. Now, let me tell you why. The steel industry is one of the worst carbon emitters, accounting for about 8% of global emissions. That is huge. As the world tries to decarbonise, recycled steel is suddenly very, very popular. It's mostly used in what they call electric arc furnaces at plants, which are far less toxic than coking coal furnaces and are part of the journey to producing green steel in Australia. So everyone wants recycled steel. The demand has pushed up prices and helped Sims announce a profit that's 350% higher than a year earlier, and that's all on the back of higher sales and material prices. Certainly shareholders loved it. Sims' share price yesterday jumped 17% before it closed up 14%. Pretty good day for scrap metal merchants.
Yeah, and there were lots of other earnings around yesterday as well.
Yeah, Tassal, the seafood group, I love this company. It reported a jump in revenue and profit thanks to higher sales of prawns and salmon. In fact, salmon revenue was up 37%, while prawn revenue was nearly 5 times higher, albeit from a low base. The report says the annual salmon harvest is now around 40,000 hog tonnes. Okay, Michael, I'm setting you up here. Have you got any idea what a hog tonne is? That's HOG.
Sean, it honestly sounds like something that you just made up. So no, I have no idea what a hog tonne is.
I must say, when I read it, it kind of set me off on one of those goose chases I didn't have time for, but I did anyway. HOG, H-O-G, stands for head-on gutted, as opposed to WFE, which is whole fish equivalent. Now, the difference between the two is whether a fish has been gutted or not. What's this got to do with Tassel's results? Well, not really anything. But I did learn something new. Anyway, Tassal declared a higher dividend and its share price was flat yesterday. It remains well below its pre-pandemic level. Michael, there were a bunch of reports out yesterday. Let me run through some of them. Cosmetics retailer Adore Beauty Group posted strong sales growth for the December half year. Revenues boosted by big shopping events that are happening, but marketing costs are really hurting that company. its share price finished down 8% yesterday. Online recruitment group Seek declared its highest dividend in 3 years following a jump in sales and profit. Pre-tax profit was 3 times the level of a year earlier. Basically, as lockdowns ended and restrictions were eased, businesses started to rehire people, and that helped Seek. All makes sense to me. Its share price jumped 6% yesterday. Protective clothing group Ansell has had a really rough couple of years. Profit margins will remain under pressure and supply chain disruptions are still hurting the group. Ansell had to bring in higher priced inventory from other suppliers to meet demand last year, but that demand is now falling and the group needs to offload product. That's really hurting profit margins. It said profits were down 27% and its share price finished down more than 1%. And finally, Media Group 7 West also announced a higher profit on the back of a stronger ad market, though investors weren't impressed. Its share price fell nearly 7%.
Okay, Sean, what's making headlines in today's news media?
The Australian is reporting that the Chinese government's propaganda mouthpiece, the Global Times, has published an article endorsing Labor leader Anthony Albanese as a better Prime Minister than Scott Morrison. The government-owned media outlet praises Mr Albanese as a safe leader, saying he positively shines compared to Mr Morrison. Good news for residents of Western Australia. The first train carrying food and groceries to the state since floods damaged a 300-kilometre section of the transcontinental rail track will arrive this morning. But food shortages will last up to 6 weeks more, supermarkets say. That's according to the Australian Financial Review. And the Sydney Morning Herald is reporting that a decision on stood-aside Cabinet Minister Alan Tudge has been delayed until federal officials review an investigation into his affair with a former press secretary. Amid new rumours, he will be dumped from the ministry before the election. Prime Minister Scott Morrison will wait for advice from one of his top public servants before taking any action on the senior Victorian Liberal.
Okay, running through some of the other stories around today, Prime Minister Scott Morrison yesterday repeated travel warnings urging Australians to leave Ukraine. He said threats of Russian violence were unacceptable and Australia continued to support the people of Ukraine and our many partners and allies.
Western Australia is poised to set a new date for the reopening of its border in the next fortnight, according to Premier Mark McGowan. The comments came after Qantas said it would extend its stay in Darwin to base its Australia-London non-stop flights, though eventually it will return to Perth. And Michael, just quickly running through the COVID numbers yesterday, both Victoria and New South Wales recorded around 8,200 new cases and 36 deaths across the two states. Queensland recorded 5,300 cases and 10 deaths. Otherwise, it was about 600 cases across the rest of the country.
Now, Sean, we mentioned yesterday about the $170,000 bonuses paid to Australia Post executives. It sounded like a terrific story. Unfortunately, we didn't quite have the whole story. Aussie Post was appearing before Senate estimates, and it emerged that 5 executives received retention bonuses of up to $500,000. Apparently, they were being coaxed away by a major competitor and they had skills that are pretty hard to find. However, Green Senator Sarah Hanson-Young still said the sums were extraordinary and out of touch.
I think she has a point, Michael. Would you agree?
$500,000 as a retention bonus? It might be a little bit out of touch.
For a government-owned organisation? I think so.
Yep.
And finally, Michael, Australia's new low-cost airline Bonza will base itself on the Sunshine Coast when it launches in the middle of the year. It will service 20 routes not flown by the major carriers. The routes are mostly from regional centres like Mildura and Albury to tourist destinations in North Queensland. They'll fly 2 to 4 times a week.
Okay, now what's the key overseas news this morning?
Well, the standoff between Russia and the US and its allies over Ukraine continues. While Moscow has been discussing the potential for a diplomatic end to the crisis, the US claims that in the past 2 days, Moscow has ramped up plans for an invasion. On Monday, Russia's foreign minister said his country was prepared to keep talking to the West about its security concerns. Britain's financial regulator has told 4 buy now, pay later companies to rewrite some of the potentially unclear and unfair consumer contracts and refund some late payment fees. While the sector is growing really fast, regulators have, until now, played a very hands-off role. But the decision by Britain's Financial Conduct Authority highlights regulatory risk in the new payments model. The 4 companies include ASX-listed OpenPay and Swedish firm Klarna, in which Commonwealth Bank has a minority stake. I think we're going to get many more of these stories in the next few months. Also, Michael, Bloomberg is reporting that Donald Trump's longtime accountant has told the Trump Organization that a decade of financial statements it helped prepare can't be relied upon, and it won't do any more work for the Trump business. It comes as part of a court filing by New York State. Now, Mr. Trump's finances have been questioned ever since he hit the public eye, particularly his tax returns, and normally an accountant dropping a client is a red flag for authorities and investors. We'll stay listening for that one. Finally, you've got to give it to Elon Musk, the boss of Tesla. He always surprises. According to SEC filings, he gifted almost $6 billion worth of Tesla shares to charity late last year. Easily the biggest single handout to the sector ever. It's not known who actually got the shares, but it will help Mr. Musk reduce his tax bill, which is expected to be around $10 billion, mostly because of the huge amount of options he triggered last year.
That's a pretty good story still. Even if there is an incentive to do it for tax reasons, still pretty generous.
Good on him. Absolutely, $6 billion.
Yeah, not bad. Up next, Sean, is the Fear and Greed Daily interview, and today you're speaking to Grant Dearlove, who is the Managing Director of ASX-listed law firm AF Legal.
Yes, Australian Family Legal, that's what the AF stands for, uses digital marketing now to attract clients. It's a very new age model for a very traditional business. Really, really interesting how they're doing it. Well worth a listen.
Yeah, sure is. That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean. Enjoy your day continuing to explore the central west of New South Wales.
I will do that, Michael. Have a great day yourself.
It's Wednesday, the 16th of February, 2022. Make sure you're following the podcast and as well join us online on LinkedIn, Twitter and Facebook. I'm Michael Thompson and that was Fear and Greed. Have a great day.